Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, and we're at the 7th of July, 2025, just getting on to 7 p.m. We should see quotes fill in here as I'm talking in just a minute or two, because we're getting there. You know, today was one of those interesting days because we've heard the OPEC announcement. I understand there's going to be a meeting, I think, on the 9th and the 10th. And you would think they're going to add another 500,000 plus barrels a day in September, yet the market barely broke. You had a break early last night, then a pretty good rally, came back. You'll see that. Bonds and notes getting a small bid tonight, in large part because we now know more about the tariffs, and that weighed on the stock market. It took the market down today. Just keep in the back of your mind, Tuesday reversal. A big break on a Monday is often met by an attempt to get a reversal. We'll see if that's going to take place. S&P is trying to come back right now. These markets, as you can see, what they're doing. Now, I want to remind you that my sale ends tomorrow. So the 4th of July sale, it's over and done. You will not hear me talking about it tomorrow night. I'll just pass it. You either are in it and want to do it or you won't. But any of my courses here, my morning video, $94 a year. So we're talking, what, $7.50 or so a month to get about 25 videos, free access to my special reports, because after you get them for one or two of them for the year, you don't get another one. And as you know, I'm talking of doing webinars shortly, probably do them towards the end of July. And when I do, I might charge people that aren't subscribers to come into them. We have plenty of people that are subscribers, so we will see just what we do there. But these are the prices. All I need to do is come up with an idea that you already have, and maybe I'm that force that helps you with it. Or maybe you have an idea and you're wondering, and I'm giving you all the reasons not to do it. I'm not going to be right all the time. If you're looking for somebody that walks on water, I am not the old Joe Granville. I don't know if you remember who he was, but that was his shtick, and he was quite a character. When you look at an interesting chart as to unbalanced volume, if you've ever heard of that, go look at that study. Charting courses, yeah, why not learn? That's what it's about. You think you know, you think it's free out there. It isn't free. The good stuff is not free. The bad stuff's always free. I don't know how to make that any clearer to you. I mean, go to your lawyer and, think you're going to get a free lawyer. What quality is that versus typically, the lawyers that you have to pay for, typically. I'm not saying all lawyers you pay for are good, and I'm certainly not saying free lawyers are bad. I don't take it that way. Typically, you get what you pay for in life. All right, what else do we have today? We had tariff news, and let's go to that first and get there. Let me bring this up right here. If you want to view these, by the way, they're in my newsletter tonight, but you have to be a subscriber. But I wanted to show these. I rarely give you all this detail here. You can hit pause, and as you do so, you can read what they are. But the early tariffs that have come out, I think I covered them all for today. There's guardrails. It appears to be 25% on the downside for these countries and 40% on the upside. That doesn't mean they can't go higher or wherever they're at. But if you look at all these countries, the president's basically saying that they didn't come to the table aggressive enough. You know that the president's upset with Japan. You know that the president's tired of paying in North Korea for 28,000 U.S. soldiers. He wants compensation back in certain ways. He's tired of these two countries not buying U.S. cars, but they ship like mad to America. And yet, just recently, Japan wouldn't even consider buying our rice. Why not? Notice that when you go through this, you still don't see Mexico. You don't see Canada. You don't see the European Union, other big trading partners. So the big boys are yet to come. I wish I could tell you I knew more than that, but I frankly don't. The National Federation of Independent Business, they're going to come out at 5 in the morning. Red Book Group at 7:55 with retail sales. And we'll get the Federal Reserve to release their May consumer credit. And they're looking for that to have expanded by $11 billion. The other thing that we learned today was that instead of the July 9th time frame, we're not getting that for the tariffs to kick in. It's been pushed back now to the August 1st date. That'll be it. Why? Now that these countries have had a chance to see it, let it sit in. Can they make better deals? And you always have that opportunity to call up and make your better deal. As Scott Besson said, his mailbox was full. They looked at it. They went through everybody that wrote them. You can see what's up. So if you're there tonight and you're seeing what this is going on and you think your deal should have been sweeter, it's probably time to make it so. All right. Why don't we just go to some charts and take a look at that? For the S&P, we're down almost 1%. So we did finally get a correction. Now, it's interesting, too, because you're getting some downgrades in names that have run. CrowdStrike, Netflix. I'm watching some of the big firms starting to pull back. They think they've gotten ahead of themselves, and they're giving either holds or slight downgrades from where they had been. And that's weighing on the market a little bit, too. When we look at the S&P 500, we can see today was the first meaningful break in quite a while. It didn't violate anything on the chart yet. You still have the higher lows and you have higher highs in place. The market is far away from the 18-day average, which means the bias is still up in the market. What has been stopping the rally is the Bollinger Band. Remember, I said we had that gorilla glue trade. You've lost that. It's no longer in play. Now the market's got to prove, can you get a Tuesday reversal? If you don't, you could get a break back to these 18-day average of closes. I'd be surprised if price doesn't come up a bit and the market breaks down to it in that case. Here's what I think is going to rule the day. We haven't lost the embedded reading. It's still at an 86. If it gets under 79 and closes under that, there is a problem. That probably means we're going to that 18-day average. In the NASDAQ, same thing. You have your embedded reading. It's got a hold here. It's not falling very much tonight, as you could see. Can it snap back? It lost its gorilla glue trade a week ago. And since then, it has been able to come down, get another rally. You know where the resistance is. If you had a big rally tomorrow, I'm going to tell you 23,229 would be the next resistance spot. Traders that followed my morning research last week had gotten into this market, and I told them at the 23,000 mark was where I thought a good spot was to lighten up, and I feel good. They cut their position down by quite a bit. And they're nicely, I hope they keep the profit. That's the hard thing, the rest of it. In the Dow, embedded. No pullback, as you can see from that. Got to see if it holds. And the weakest right now that it is losing the embedded ability is, again, the Russell. That doesn't mean it's a problem child yet. This is the first move to the 200-day average. You heard me tell you last week. I said, folks, I think the bottom pickers are looking for things that haven't rallied. The Russell's makeup fits that in a big way, but you don't buy a combination into a 200-day average the first time you've hit it, and God knows how long, and the Bollinger Band. You could do it. I certainly would never teach you to do that. Then we come to the DAX, and it's sort of stalled out, and it's overbought. Probably not the place to be for the moment. Even if it rallied to the Bollinger Band, it's got to prove that it can embed, or overbought has a way of correcting by going sideways to lower. Not the place to be, I think. In the 30-year bond, you had gotten up for these battles between the 100-day average and the Bollinger Band. Then you got that good piece of unemployment data. The jobs report is really the right word. And the market has since then, because you took in my opinion, you've taken the Fed out of the play for July in any manner. The jobs market's just too strong. I think the Fed is elated. I think their eyes opened today when they saw the first round of countries, what those tariff guardrails look like from 25 to 40%. This may help them develop a model that they can look at for September through the end of the year. We'll see. In the 5-year note, the same. Definite problems. Markets under the 18-day average of closes, the bias down, momentum down. I don't see a trend, but the market's slipping. And in the dollar, I'm just looking for short covering, possibly to the 18-day average. It's got to prove it can do more than that. I read some interesting reports today that were trying to show why the dollar is going to rally out of here and keep going. It could. I'm wide open. We have price counts, like I said, to 88 to 90. It's rare that you hit a fifth price count, but I have an open mind to it. I'm not there like I was in silver. My silver report was probably the most recent report I was really pushing on. And what I was saying on the natural gas, when I thought it would get a rally at that time, and it did those two. I don't have that feeling on the dollar off the chart action, not off what I think, that it's ready to tell me a story. It's correcting an oversold market. It's staying under the 18-day average. So far, it's no more than a bear market rally. And in the euro, you lost the bullish embedded reading. So the flip-flop, and finally I'm getting the two to work together, is maybe it falls back to the 18-day average, the 117.037 level, and try to figure out what's there. So we'll see, 117.04, so you can round it to. The British pound, right back to where I want to see it. The 18-day average, and each day now it's playing against it. That's what I want to see. It's going to rebuild whatever it's going to do. For the moment, the trend is down on the swing line. The bias is up, and you're correcting an overbought condition in the market. When we come to Bitcoin, I still think it's going to hang around the 18-day average and play there. It's overbought. You have a lower and low, higher high, and the price pattern, don't see anything there. And as I said, I am surprised that energies were able to rally here, but all they've done is gone back to the 18-day average of closes. I realize OPEC thinks everything's going to be good. I don't know, 25 to 40% tariffs in some of these countries. I don't see them going out and saying I need more oil because of that. I could be wrong, but we are the biggest market in the world in the United States. WTI, you're fighting at the 200-day average and the 18 for direction, still an oversold market, certainly not a short sale from my point of view when that happens. And I was laughing today, and I mentioned it in my morning subscriber video. Remember what I said last week? The president's going to keep that oil down until July 4th is come and gone. And he did, and you got an immediate rally out of it right afterwards. I mean, it makes you laugh. In the natural gas, you're still very much in the bear camp. Lower highs, lower lows. And notice the market is trying to embed again. You can't count tonight, but if you can get 3 of these days under 20, which is 1, 2, and today could be the 3rd. So we'll wait and see if the market can do that, and that is where the interest will come in. Remember the sale, 40% off. I'm not going to be talking about it with you tomorrow. I'll do it in the morning flash video, but that's where it ends. I'm Ira. You have a good day. IraEpstein.com, courses and research. You need no discount coupon. The price is right there when you buy. Take care.